Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the Bitcoin node monkey market, the CryptoPunk market, all the markets, the Penguin market, the NFT finance market, the disastrous loan NFT market, all of it. We're going to get into all of it and more as always. But just before we get there, I'm joined, of course, by my legendary co host, Legendary and Sammy. And we have a special guest today. We have none other than English. He is making Bitcoin magical again on the Taproot Wizards team. He's the host of the Lil Nouns show and a new Ordinal show, which I was tuning into last night as well. Get all sorts of great information on everything Bitcoin there, working across the ecosystem to find out the best stuff that's going on Bitcoin. Can't wait to get into all of that and more with the squad today. But before we get there, just a reminder, friends, that nothing that we say here is financial advice. We do not know anything for sure. So please do proceed with caution and, of course, exercise your own judgment. With that out of the way, Legendary, it is Friday, the 8th of March. How are you doing today? What's the story?
GM, doing quite good. I mean, I'm waiting for the weekend to have a bit more time to catch up on some of those things that I didn't have a chance to do. I think meme coin season is going to be intense on the weekend as well. I think there's going to be more inflows coming over the weekend.
Interesting.
People have more time to deepen into that, and there's definitely a couple things I wanted to explore, as well as a couple pitch decks that I have on my table that I need to take a look at and decide, is it a yay or a nay for an investment. So quite a few things actually, but I like it because it's more relaxed, and I feel like I just have zero chance to do that over throughout the week. And also, last but not least, I did separate myself from some of my JPEGs, and I have to continue doing that over the weekend. There's something I want to buy, and I'm freeing up liquidity for that. Put it into another illiquid thing.
Love the phraseology. Like you have been separated from. You were not part of the process. Someone had to come, like a judge came in and had to say, Legendary, you and this asset cannot be together anymore. You will now be away from each other with you have to be a reasonable distance away.
The judge said, look, you're over allocated. You have to keep a healthy distance, and I'm just following the orders.
Nice way to look at it. Be interested to hear about what kind of things you want to be looking at over the weekend. English, welcome to the stage, my friend. Thanks so much for joining us. How are you feeling as we're getting towards the weekend? Are you in a similar vein, like just trying to get through the week and then got some other tasks for the weekend? The space is 24/7 at the moment, right?
Yeah, I'm pretty slammed. I have some contracted work out for a couple teams in the Ordinal side, so pretty busy with that. I'm feeling pretty good with my investments on the Ordinal side. I have a pretty good bag of ETH that I've been meaning to split up into Solana a little bit, and really the only thing that interests me is probably some shitcoin. So So looking where I want to park that, I think it's been doing fairly well as like just the underlying asset, but I don't know. I had this weird theory that like I don't think it's that uncommon for people to think this, but I've done so well on the ordinal side that a very small amount has quickly turned to even much more than my original bag I came into. And so like I kind of want to just like split my Ethereum bag into half Solana, half Ethereum, and then just go 100% in on WIF and Pepe and just let it go. And that's my proxy for it. And just figure, hey, if the underlying asset's going to do well, these are the two. And it might not be 50x, but it might be 10x from where we're at now. And that's going to be higher than the underlying asset. So that's something I've been playing around with.
Interesting. I mean, one of the headlines for the show today is that ETH is like knocking down the door of 4K, and like, what are the implications of that? It sounds like one of the ways you're thinking about it is because that underlying asset is doing so well, and also actually because you've done so well and part of your portfolio. This is one of the things that happens in this space, right? Like, it's very difficult to have a good handle on your portfolio because things move so violently, and suddenly you're like way overexposed on one and way less exposed on the other. Do you want to talk through your thinking as to like why what you just suggested makes sense to you, like to try to take
Yeah.
what
Yeah. So like I'm so active on the ordinal space. And so that's what I use as kind of like my leveraged bet in a sense. You want to accumulate that underlying asset, right? So like if I start with 1 Bitcoin, ideally I'd like to end up with whatever, 2 Bitcoin, 5 Bitcoin, 10 Bitcoin, because you're bullish on the underlying asset.
Yeah.
And you believe, at least in the short midterm, and maybe if you zoom out far enough, that with even the bear market, this will go up over time. The chart over time is up and to the right, even if there's these dips. And
Sure.
because I'm not active on the Ethereum side anymore, and I've never been active on Solana, I do want some diversification there. And I'm not going to bridge stuff and do airdrops and play YOLO games and all that other stuff. Just I'm so busy, right? And so
Shot
I
at
have,
legendary there.
yeah, that was towards legendary. And so my thinking is, okay, how can I maximize this, right? So do I maximize it by bridging to Blast, which I did, and I get, a yield, and then plus the Blast tokens, all that other stuff. But had you bridged to Blast, or if you had gone into Pepe or Whiff, and Whiff did a 5x, whatever it was, 6x, I don't think you're going to get that on Blast. I don't think you'll get that. And I think as late as it feels right now to get exposure to it, I don't think double digit market cap, so I'm talking about, instead of just 2 billion, 20 billion is out of the range. And if I had to say that, could Pepe do a 10x? Yes. Could Ethereum do a 10x from here? Probably not, right? Like that's even on the high end, what you're talking about, 10K, a good, 2x. And so like, even if it doesn't perform that way, I think at some point it's going to overperform the underlying asset. And if it goes to zero, I just made so much on the Bitcoin side that while it would hurt and I would cry myself to sleep, I'd survive.
Fair enough. So it's like you've done well enough and you just feel like you need to make that bet. That's actually quite similar way of thinking to what I was thinking recently, where you feel like you're doing well, like the underlying assets are going up. But then if you haven't got anything further down the risk curve, you feel underexposed, right? Because even if you're holding Bitcoin and it's going up, that's wonderful. You're holding ETH and it's going up, that's wonderful. But like as a proportion of that stack, like if you're not, the way I think about it, I had this analogy it was an NFL analogy. It was about, what's his name? Rogers. What's his first name again?
Aaron Rodgers?
Aaron Rodgers. I was going to call him Alan Rodgers for some reason. Like his passing accuracy is so good. And one of the criticisms I think at some point in time last year was that he's not taking enough shots. Like, of course, the accuracy is so good and you're doing really well and you're performing well. But if you're not taking one of the Hail Mary, not literally a Hail Mary, but one of the longer shots, the more risky ones every now and again, then like the overall thing isn't going to be as good. So interesting to hear that perspective. Also interesting that English and Legendary are both got meme coins on their mind. And just from an attention perspective, I always like getting people's sentiment to just figure out like, right, what are people, where's everyone's attention going? It feels that way. Sammy, welcome to the stage. What are your thoughts? Is this on your mind as well? Is this like one of on your to-do list for the weekend? Is it like meme coin, figure out which meme coins you want to buy?
Well, I guess I'm already allocated to meme coins, so I've taken that run with Whiff up. I feel like it's one of those questions. I think we discussed this previously on another show, but why would I buy in now at a higher level when I've already bought in at a lower level? I sold 50% of it. I don't want to FOMO back in. It's felt like it's up only. Like I think Whiff's at like 228.
Sure.
I think I bought in like maybe 20 cents or something. So it's just like, it just feels like I've got that 10-15x. I just don't know if I can stomach it. So I'd be looking for other meme coins. Although I put some money into Blastoise, like Toys, and that's down like 80%. So
oh, no.
it's like, yeah, I don't know. It's risky. And I think allocating a portion of your portfolio is sensible, but not putting a significant amount at all.
Fair enough. It's very interesting stuff. The psychology of it, like when you've already won on something, how that might make you less likely to go in on the same thing again, even if had you never been in on it, like it's still the winner. It could potentially still be the winner, but psychologically, because you've already won on it, you might not want to go back. Before we get into the headlines today, want to just bring up a couple of interesting tweets, some of which is related to what we're talking to. We're going to get into all the NFT market headlines and crypto stuff in just a little bit. I brought this tweet up kind of related to what Sam maybe was just alluding to, like trying to figure out where the top is for some of these assets. It's from Alex Kruger, who I listened to in an interview recently, and he spoke really, really well kind of on macro and crypto. And he said this, he said, people in crypto are obsessed with the top, in inverted commas. This is a pointless endeavor. The key to this market is a combination of stamina and good risk management and not guessing where the top may be. Cyro Crypto asked, what are some indicators, clues we can use to know when to exit this market? Obviously, a very important question that all of us are always thinking of. Alex said this, he said, funding rates are very helpful. There are many such rates driven by futures and perps. But if I were going by funding rates alone, I'd be out of the market now. Yet I am fully allocated without leverage. Open interest is useful. The pi cycle top indicator is simple but good. A good approach is to take some profits but not exit in full when one starts getting concerned about a top. Better than going all out. Legendary, want to come to you first here. What are your thoughts on Alex's comments that, you know, funding rates are helpful, open interest is also useful, but even when funding rates are high, it doesn't necessarily mean you're at the top just because those rates are high. What are your thoughts here in trying to evaluate when we're nearing a top?
Yeah, there's parts in those posts that I agree with, parts that I absolutely disagree with. Okay. Funding rates are very helpful. Agree with that. High funding rates, then over leveraged people getting flushed out, getting liquidated is something we've seen over and over, and that's definitely the case. Also agree with the fact that it's not really a top indicator, because otherwise we would have seen that bounce back from the last liquidation after we quickly hit all-time high and then had that liquidation event. With the other part of the tweet with the pi cycle top indicator, which I had to look up, which is an indicator looking at the 111 days moving average and the new metric 350 days moving average times 2, and puts them into relationship to find out if it's a top or not. I'm just not a big fan of chart analysis. I still feel like there's no empirical evidence to that this is more than tea leaf reading. Plus, you never can factor in any external things that happen because you're just looking at the chart. So if you have something like the FTX collapse, and you have your beautiful chart analysis laid out, that completely fucks with you, especially in a space that is as small as crypto, where you can have multiple black swan events that trigger a massive amount of volatility, is even less reason for me to look at charts and be like, because my indicator says this is the absolute top and this is where I'm out.
Yeah. So, I mean, ultimately then, Sammy, maybe, do you agree with that kind of statement at the top, that being obsessed with the top is a pointless endeavor?
To a degree, but I think I tend to disagree with Legendary on a couple of those points, because I do think there is some science to technical analysis. I think that especially when the market gets more sophisticated, you're going to have algorithms trading to certain levels and things. And I think if you look at the Fibonacci scale, people just use that. So naturally, people are going to stick to those sort of levels. So I think there is something to technical analysis, but I do agree with him that obviously if there is black swan events, you can't factor that in because there probably isn't that much historical evidence to then kind of predict when that's going to happen next, because they're like 1 in 100-year events or whatever. But yeah, I don't know. I think it's very hard to time the top, but I think you also need to think about when, what stage in the cycle you're in, because it feels like we're still relatively early in the cycle. I think that Bitcoin can go a lot higher. That drives the market. So I do think that even though funding rates are high, that doesn't necessarily mean that it couldn't go higher. It probably means there's going to be liquidations at some point. There's going to be a dip, which we saw, I think, 2 days ago. But then I think it resumes its course and carries on up for the time being, just because that macro sentiment is quite big.
Yeah, completely fair enough. English, I don't want to limit you to ordinals or Bitcoin, though you are our resident ordinals expert. What do you think about this concept of us, where we might be in the cycle, but maybe linking it to Bitcoin if you want to? Bitcoin is expected to move higher pretty soon. Ordinals are pretty expensive as they are, do they keep going up with Bitcoin? And we have seen a bit of a pullback, right? Node Monks went to 0.9, kind of went down to 0.6, 0.7 over last weekend. It was like on fire. So obviously it's like subsided a little bit. What are your thoughts there?
Well, I think there's two separate things going on. So if you want to just talk about ordinals, there is a pseudo Black Swan event going on, and that's ordinal eyes, orange eyes about to come out, and that's sucking out the liquidity. There's not a 100. There's no doubt in my mind, and so that's what you're seeing. I don't think you're seeing like this natural healthy pullback because it ran so much. I do think that people are selling. I mean, Node Monkeys went from 0.2 to basically 0.9 Bitcoin in 2 weeks, right? So normally there would be some kind of pullback, but I think really what you're seeing here across all of these major collections is this kind of air being sucked out of the vacuum, or this air sucked out of the room type of vacuum effect. But outside of that, like outside of what's going on in Ordinal's ecosystem and Bitcoin, I do think you should be obsessed with the top, but not trying to time the top in one exit. I think the biggest challenge is the psychology of it. And if you don't start taking profits, you never will. It's actually easier to hold because it's like, what if this keeps on going, right? And so then you're like in this paralysis mode, like, oh, I don't want to sell because it's going to moon. But in a small portion of time accounts for your major move in crypto. And so like I was chatting with somebody that like sold Bitcoin at 2,500 and felt like this was amazing, right? And then it moved and it did a 10x from there in a very, very short amount of time. And that's what you're scared of, right? But if you only sold 10% and just get used to selling, even if it's a small amount, you'll feel good about it. And you'll be like, you know what, I've just allocated this. And so what? You took 10% off and now at 10x, then you have 90%. You'll feel good about that. But then when things feel frothy. So to me, it's really more just the psychology of getting used to selling when things feel frothy, even if it's a small amount, and just get your feet wet, kind of say, okay, I'm okay selling it. And then when the market structure does start to like collapse and you think, okay, this is not just something that's right now, but it's going to be a trend for the next 6 months, 1 year, 2 years, 3 years, you'll feel okay selling and you've taken some profits along the way. So I'm more concerned about the psychology as one is as a trader, as opposed to what's going on in terms of TA and what's the top and what's not.
Yeah, really, really interesting thoughts. It kind of makes me think of how I'm thinking about it. I think there's something that you can do in terms of planning as well. Like you can plan, like there's a bunch of inflows that I'll be having in the next few months from various investments kind of coming back to me. And in my head, one of the strategies I'm trying to employ is like, okay, I'm more bullish in this half of the year and maybe even towards the end of the year. But, once you go 18 months out, 24 months out, it's like, well, I don't know where the market's going to be then. We've been up only for quite a while now. So I'm thinking like the proportions of those inflows that come back to me that go back into crypto will start high, and then they're going to start tapering off almost to nothing by the end, where I'll be stabling everything towards the end, like maybe towards the end of this year. I don't know exactly when. I haven't thought about it enough, but like something like that as well is a way that you can, just plan part of your exit, whether that's an exit into Bitcoin because you think that's the thing you want to hold, or an exit into stables to prepare yourself properly. Funky, your hand is raised. Welcome to the stage, my friend. What are your thoughts on this idea of like trying to prepare for, when the market feels a bit toppy or frothy?
GM friends, yeah, thanks so much. I did want to kind of respectfully disagree with Legendary as well on the pi cycle indicator.
Okay.
I faded that before, and that thing is eerily close because it will kind of pick it, and everybody's still in the euphoria phase, and oh no, just it's just another indicator, blow it off. And it was eerily close. I think you can't discount the Fed. If we go into this cycle and they're continuing to just reduce the rates, it's going to increase liquidity. This thing's going to go really bananas. So, like paying attention to what the Fed is doing at the macroeconomic level and how that liquidity is going to dry up and what people are going to risk off is a great indicator. And personally, because it's the third time going through sort of a bull run, my strategy is just anything, certain stuff, maybe even lower price points. But if it's something that I just take a flyer on and I get a 10x, I sell half and I park it in stables and I put it away. And I don't even want to use those stables. I'd rather just stack stables and play it safe. but some of those little things that just pop off, like OPSEC is one of them that just absolutely ripped, and I sold half the bag at 10x, and it just kept ripping. And then you still get that feeling of, oh my gosh, I sold too much. But I look at the stables and I think, I put $500 into this thing. I've already realized the 5x on that. It's just worth being cautious and conservative, at least for me at this stage and on my third cycle.
Yeah, very fair enough. And I think the fact that you're in your third cycle, I've read this is the cycle that you need to make it funky. First one is where you do it wrong. Second one, you do a little bit better. This is Funky's cycle. So interesting to hear that perspective from someone who's
This
been
is all
around.
our cycles. We're going to do this together.
That is the intention. That is the intention. Would love to hear, just seeing NFT Stats is up top with us. Sam, welcome to the stage. Would love to hear some of your reflections from, just various forms of investing that you've done before, also being in crypto for a while now, like just trying to assess where we are in the cycle and what an exit strategy even looks like to you.
I mean, for me, I don't really, it's hard because I'm in such a different place, I'd say, as far as like my overall
Sure.
allocation of crypto. I just kind of like, my crypto allocation I just kind of keep there. And, I've tweeted a couple of times how I bought a couple Bitcoin at like 66 or like $65,000. And then it was like, it was down 70% for a long time. And I just held it and it kind of, now it's up. But like, I don't know. For me, most of what I generally don't try to play the stuff that's super high velocity that I feel like I have to exit. So I have a bit of a different perception. One of the stories that comes to mind, though, and I think it's only slightly relevant here, but when I was living in Hong Kong, Peter Thiel came out and spoke there, and someone asked what the best thing he ever missed was. Okay. And he said Facebook Series B round. And I thought that was such an interesting response. And the reason is he invested in Facebook Series A round. Okay. And he couldn't think of investing at Facebook at a 10x higher price. And therefore he passed up Facebook Series B. And I was thinking about that. I think it was Sammy or someone who made the comment that it's hard to invest in something if your initial cost basis is so low. Now, I think it's only slightly relevant because I don't think Dog with Hat is comparable to Facebook. And I think in the game of something like Dog with Hat, I think ultimately, and I say this with a little bit of humility because Dogecoin has proven that meme coins can stay valuable for longer. But at the end of the day, like these things are literally just attention economies. And one thing that I think in the space is attention travels very, very fast. So you have to get out of this stuff quickly because it's not like the cash flows are going to bail you out over time. Like ultimately this stuff could go to zero. I think it is more important. I haven't figured out though the algo though. Yeah, I'm sure there are good algos out there for how you know when to get out. And I'm sure there are people making a lot of money on those because my guess is that this is a momentum game. And when you see signs that momentum is turning, you want to get out, which is different from like a lot of assets where when things are turning, that's kind of the buying opportunity. I think this is because the whole economy is just attention. Like momentum is a lot more important than it is for more traditional assets that have more fundamental drivers. So I don't know, a bit of a ramble, but I did like that story, and I do tell that story when I get the chance.
I love it. I think that's a really, really important reflection. It's like at all points in time, we have to be evaluating our assets on the basis of them being like on the present day. Like it's not about what it was before. It's not about what you think it's a little bit about what you think it could be, but just like on the present day, is it a buy, sell, or hold, irrespective of the price that it is? Really interesting perspective there. Thanks for sharing that, Sam. Before we get into the headlines, I just want to touch on one more thing because it's such an important, relevant thing that's going on at the moment. We spoke about the airdrop, the wormhole airdrop for DGODS holders, Mad Lads holders, a variety of people yesterday, and some of the FUD associated with it because certain people didn't get the allocations because maybe they didn't sign up for the Discord or didn't do certain things that they were supposed to do, even though they'd held like a very expensive asset for a long time. Here was the kind of comment from the founder Armani with an additional comment by Chris Berniski, prominent investor. Armani said, in general, you have to actively do something to get a reward. If you don't do anything other than buy something, you don't get anything. It is that simple. Chris Berniski kind of backed that up by saying for airdrops, you should be rewarding labor and loyalty, not pure capital. Legendary, would love to go to your instinctive reaction to this.
Yeah, I feel like there's merit to all of it. and this is not a non-answer, but I feel like yes, reward labor because people are using that protocol and could be using something else. Obviously, reward loyalty because you're not withdrawing your money from Blast and you're keeping it in that L2. You're not going with any other and not lose your multiplier. To take that as an example, reward attention that someone is able to bring to projects. That's definitely the social farming side of things is relevant. It is an attention economy, but you also have to reward capital. Like at the end of the day, all those protocols need TVL, and if someone is willing to take the risk of a smart contract, of using that protocol over another protocol, and I don't know, was it OSF, was it Mando? I think it was OSF who was throwing in 1,000 ETH into Blast pretty early on. Like that's a fucking risk that person is taking, right? At that point, it was a multi-sig. Yes, Pacman has a track record and everything. Not here to argue with that, but you're trusting a smart contract. You're trusting a team with your money, and that is what you want an APY for. And being like, oh, only reward like labor and loyalty, not capital, is an illusion that doesn't depict the reality of the space that we're in.
Do you know what? I completely agree with you. I actually think Chris kind of knows that as well, because in the language it says reward labor and loyalty, not pure capital. So he's kind of saying there that yes, we have to reward capital, but not basically by saying pure capital is saying like not capital alone, which I think is actually much more reasonable to say like, look, you're not going to get everything just for the rich to get richer. We're going to appreciate that, but we also need to do this other thing, which is a bit more hybrid than maybe the initial tweet from Armani suggested. Sammy, you said you had a point to make here. I also wanted to make an analogy to Blast, then want to hear from English, thinking about this from maybe a Bitcoin perspective. Sammy.
Yeah, I think there should definitely be certain weightings that you apply to capital and other measures. But I think the thing with airdrop farming nowadays is there's very specific guidelines that are literally communicated to the public, and then all of a sudden everyone does that religiously, like so hard. They go so hard down that route that it just becomes, I don't know, it's not natural. So you want people to naturally use your protocol, and you want to reward those users for naturally wanting to use it. And I think having less or more of an obfuscated way of doing that, so keeping those metrics internal and then letting people use it naturally and then rewarding those users is probably a better way of doing it. So I think for me personally, I look for protocols that don't have those metrics announced, and I think that's probably a better way of doing it because it comes across in a lot more organic way. So yeah,
completely fair enough. I think maybe linked to that, you'll see in the snapshot, which we'll talk about later, Camino announcing a snapshot for the end of the month, which is the complete opposite of what you just suggested, saying like maybe you should keep things under wraps, maybe let people do things organically and then reward people. Like no, this is like, no, you're going to get rewarded at this date. Now everyone, I assume, is going to pile into Camino if they haven't already, and the big capital people will be able to dilute anyone who's been using it organically. So we'll see how that plays out. I mean, that's what I'm going to intend to do. I don't think I had that much in Camino, and now I'm going to reallocate more. So we'll see how that works out. English, would love to hear your thoughts here, just both from the airdrop farming kind of meta and the strategy there. And also you were talking offline with us about, I can't remember the Runestone protocol. I don't know if it's an airdrop associated with that or just something very interesting going on there. Maybe you could speak to that, because I think that's something people should definitely be cognizant of.
Sure. So it's interesting, like in the Bitcoin side, on the ordinal side, things are very much kind of like this 2020, maybe 2021 era. You don't have the infrastructure that you have. You don't have a hyper financialized ordinals kind of stuff. You don't have lending the same way. You have Liquidium, sure, and that's kind of, it's not permissionless. It's semi, you have to put some trust in it, but that's fine. And there's not really like all this other type of DeFi stuff. And so people are just eager to allocate towards people. So very much like in like that Bored Ape kind of model, and maybe Artifact, and where people are just sitting there and they're getting stuff, because you want this in the hands of people that are actively trading, that are actively holding, that have skin in the game. And so what we've seen is little to no work. Sure, if there are protocols like Liquidium, I think there's another one from the the Saturn team, where they're doing some kind of buying and selling of rare sats, and you can use that. But there's two specific pre-mined runes, and what that means is, hey, look, we don't have an ERC20 like coin yet on ordinals, but there will be one, and there's already a social consensus. I say 99% of people have agreed we're going to do runes by Casey, and I can get into why, but I think that's beyond the scope of this conversation. That's where we're going. And so there's a team that said, hey, listen, let's airdrop these mining runes where it's actually an inscription, and you hold on to it. The longer you hold on to it, you get a portion of that allocation. You're actively mining this allocation. If you sell that inscription, you keep your allotment, and you'll start mining from there. So you actually keep what you're, for the duration that you've held. And that went off pretty well. And that went to like Node Monkeys, that went to Puppets, a few other communities. What Leonidas decided was, hey, listen, I want to reward every single person that participated in the last year of ordinals. So there's a snapshot taken. And if you just held 3 inscriptions, I think at any given time, I don't think you maybe needed to hold it, you're going to get a portion of this allocation. And so we're kind of waiting on that. And there's a wallet checker and all this. Suffice to say that I think another counterpoint is there's no team allocation where R6 has a 10%. And so it's like, where do you weigh in on? Like, do you like the fact that this was the first R6 and people gravitated to that has a certain mind share? Or do you think wide distribution will be the best way to, I guess, make people bullish on it, to have some skin in the game? So that's kind of what's going on with runes. And I can chat a little bit more about runes specifically, but I'd really say that people are so eager to be the first, and I don't mean first in a chronological sense. I mean like the one that gets the mind share, the one, right? The Pepe, the whatever, the one that everyone knows. Like Pudgy Penguins right now is the one. You have Mad Lads is the one. Like there's a certain one that everyone knows is leading, and people are so eager to front run that they don't really care. They don't want you to do too much stuff. Just adopt my brand as the main one, and we'll give you rewards. I think that's kind of the feel of it. Yeah.
Okay, that's very, very interesting kind of background and context, because you can kind of feel that from the outside. I know you're much more on the inside, like in the weeds of the ordinals ecosystem, figuring that stuff out. But from the outside, it just feels like it's very hard to know where it's going. But it sounds like it's because people genuinely don't know yet. People don't know for certain like how it's going to play out and where the attention will go. So that is very, very interesting. We've like had a really good discussion start the show. I think we need to get into the headlines now and start to crack into those. As always, this information is coming from the snapshot, which is pinned up top. If you do find it brings you some value, please do give it a like. Let's get into it, starting with the price action. We've got Bitcoin up 1% at 67.3K, ETH up 4%, knocking on the door of $4,000 at 3.9K, Solana up 4% too at 145. Headlines are ETH is up 4%, approaching 4K. Solana is up 5%, approaching 150. Number 2, Portal announces Dota 2 World Invitational Global Esports Tournament with world-class pro teams. They say that they're also launching exclusive Dota 2 collectibles via Portal, although there were some comments also suggesting that then it's not like maybe an official partnership. It could be something more like they're creating loot box that Dota skins will be in, that you can probably redeem them to an account. So you've got to take that with a pinch of salt. Still kind of cool that that's how they're pushing things forward. Next, MetaStreet founder provides emergency $2 million worth of loans to prevent Penguin's NFT finance crisis. Would love to hear Sam's thoughts in that when we get to it in a moment. Someone who tracks the loan market quite a lot. In terms of some notable sales, we had a Natcat brow piercing selling for 0.6 Bitcoin. That's $40,000. We had a gold Bored Ape selling for 500 ETH. That's 1.9 million. That was actually bought by Machi as part of his fund and the proposal where he was approved to be doing this buying for the ApeCoin DAO. And in addition, we had a CryptoPunk hoodie selling for 156 ETH. That is now $600,000. When ETH is expensive, these prices have really started to run. In terms of floor prices, CryptoPunks are at 54, down 1%. Bored Apes at 17.4, down 2. Mutants at 2.8. DGods at 1.8. Captains at 4.9. Azuki's at 4.3. Penguins at 14.7, up 8% after being down a similar amount yesterday. Mad Lads steady. Mad Lads just steady every day. 192 Solana, and the Nouns winning bid was at 6.2 ETH. Legendary, that is the price action. Those are the headlines. Maybe let's just get straight into it, unless there's any number. Well, is there anything catching your eye? And then what do you think of this kind of price action on ETH?
Yeah, let's maybe get straight into the headlines, get into the ETH price action, as there's nothing apart from the gold nape that surprised me a bit, but nothing really standing out there.
Sure, let's do it. What do you think?
If we're going to hit 4K with ETH,
yeah,
I mean, I'd love to see that, because my mental model on ETH is still off. My mental model is still running on 2K.
It's broken, right? Like, look,
Yeah.
If we look at the chart, someone tweeted this yesterday, and obviously we report on the news every single day. So, and typically I report in the ETH price, and then I convert it to the USD. And you just like starting to realize that everything is insanely expensive again. Like CryptoPunk floor went from being about 75K ish now to 200K, just like that. If you look at the 1 month chart, which I'm showing for the people watching in on X and YouTube, but for the people who are just listening in, 1 month ago, we were at 2.3K. Whereas now we're at, knocking on the door of 4, which is like, it's just rapid appreciation. So what are your thoughts, like, when you're trying to adjust this mental model now, Legendary? How are you adjusting your mental model, and like, what are the implications for like what you might be thinking or doing in the market?
I still try as much as I can to stick on with stacking ETH, and like try at least for the trading side of things to ignore the dollar component of things. Like, say you take a 5 ETH bet with something like I did yesterday, and you're up like 10 or 15% on it, and you would convert that to dollars, then you realize you basically are up 2 to 3K overnight. And that might sound like a lot, because that would be an ETH in my old logic, but it doesn't make sense to do it, because ultimately those assets are natively priced in ETH that we're buying. So it makes sense to look at the ETH side of things when you look purely at it from a trading perspective. Obviously, when you look at profit taking, there is definitely merit to look at the dollar value of that, and to take profits out. What I'm still completely ignoring, is gas fees, because if I see it in my Rebby wallet. I was accepting some offers on NFTs before the show, and it was like, I don't know, $50-$60, whatever. It doesn't fucking matter. Like, I feel sometimes that we in this space tend to ride like losing positions for way too long.
Yes.
And then we like to use high gas fees as an excuse and be like, oh, I'm already down 40% on an asset. I'm not going to pay $70 in gas to realize my loss. And that's just something that you, in my opinion, have to completely ignore. I mean, unless the gas fee is more, then you would liquidate the asset for, obviously. Unless you do that for tax reasons, that's a difference.
Sure.
But this is basically where my head is at with that.
Interesting stuff. I agree with you on that point, where sometimes, like, exactly. If the asset is so low that the gas is costs more, then fine, you can just forget about it. But a reasonable amount of just cutting the losses could be appropriate. Sammy, what are your thoughts here? You said in the comments, oh, it was English who said that, but Sammy, what are your thoughts first? Like, everything is up significantly. How's this changing your mental model for approaching things?
Yeah, I mean, I think if you're thinking about things in the native token, so ETH, then I agree with Legendary. Oh, fly, sorry. Yeah, I agree with Legendary from that standpoint. But so, for instance, I was playing a Web3 game, just trying it out. I was trying to transfer tokens, so swap tokens. It's on ETH, and transfer it in, and I didn't want that many tokens, but that was costing me 4 times the value of those tokens just to transfer and swap.
That is
like, okay. In that regard, I said to the team, I was like, look, is there any way that I can just buy these through like a pay to win model, where you just literally redeem them through the app off chain? Because it just doesn't make sense. So I think in that sense, it probably doesn't make sense. But if you're just looking to flip JPEGs in native ETH, then that does make sense.
Absolutely.
Because I do agree that the profits or the salvaging your losses will more than offset the gas.
Okay.
So yeah, I agree from that standpoint.
Yeah, very much makes sense. English, I know you want to come in on this from the ordinal side and like actually holding the JPEGs themselves. How do you how do you frame this when it comes to thinking about ordinals and node monks?
Yeah, specifically. So when I saw in the snapshot, I saw 0.6 and I saw that 40K, like kind of, I was like, whoa, like the 0.6 is 40K and is kind of the same thing that Legendary had. Because in my mind, Bitcoin's like at 40,000, and that's even like on the high end. Like I was holding it like at 25,000, and like I knew it kind of trended. So like that threw me back. And then I thought about, I think I pitched this thesis on here. It's not originally mine. Udi had mentioned something like this, inscribed Pepe's Owls, is that we haven't seen collections in whole numbers yet. And as ridiculous as that sounds, you have to understand an ordinal punk very early on sold for like 11 Bitcoin. And as opposed to, 2 to 3 Bitcoin now. And my point is that there's a precedent for like these like 1 to 10 Bitcoin like transactions. And I think as the ecosystem gets more mature, people are making more money. People have priced this in a certain way at where they got in. And so if we see like what Udi calls like the ancient Bitcoin whales, these people that know Bitcoin is worth 60K or 70K or whatever it is, but they bought it for like $1,000, $2,000. So in their mind, like they know it's worth that. It's not that they're stupid, but they still kind of value it in that kind of currency. And to them, 1 to 2 Bitcoin, 3 Bitcoin, it's really not that much to them. And I do think at a certain point, the people that have been in this sub 60K, even if you purchased it like like Stats did a couple of years ago at the top, if we're talking about 150K Bitcoin, maybe 200, I don't know where it goes, depending on your measure. If you've priced that in at sub 40 or 50, and you're willing to spend 1 Bitcoin on a node monkey or close to, why wouldn't you spend 2 or 3 Bitcoin? If you know what I mean, like it's just with that same trajectory. And as ridiculous as that sounds, if you do the comps, what are we really talking about? You're talking about 300K, 400K, 500K on the top tier collections. We've seen that before, right?
Yeah, I mean, and the thing is, I was on the in my evening show yesterday with Thread Guy. There was Nate Alex on, who was collecting and trading a lot, in the early days of the Ethereum stuff. And I think he said he had up to 50 punks at that time. I can't remember if he said he still has 50 punks, but we had 50 punks at that time. And his thinking was ETH is going to run, it's going to run aggressively. And so I need to get out of these punks. Like I need to get out of a lot of them. And I can't remember the exact number that he said, but he was like liquidating them at like 1 ETH, 2 ETH, and things like that. Because on some level, it makes sense, right? Like I think he did a logical thing that like, look, this underlying asset is going to go up so much. And I don't know that this asset can outperform that or keep up with it. And that was one of the few assets that obviously did. And now you have punks that are, that seem to be very unwilling to go underneath 50-ish now. So I think the punk floor now is at 50 something. Very much holding in that region, and that's why now the floor price in dollars has pushed past 200K when it was so much lower before. So very interesting perspective there. I think what we want to do, because I'm conscious we've only got 10 minutes left, want to get to the snapshot to get to the other Web3 news. Then want to get into this NFT lending crisis that happened yesterday. It seems to be averted on the Pudgy Penguins. I know there'll be a lot of takes on that, but let's get you up to speed with what else has been happening in the space in the last 24 hours before we get there. So from the Web3 roundup, number one, BlackRock files to purchase a spot Bitcoin for its global allocation fund. There's a different fund that it filed to purchase Bitcoin for yesterday or 2 days ago. Another one today. Next, NFT Inspect announces partnership with Bitensor to foster development of decentralized machine learning network. That's the Tau token, which has been absolutely sending the last few months. I don't know what it does, but I know it goes up a lot. At least it has been up to now. Saga announces airdrop for select AVAX, Solana, Cosmos users / stakers. You can go and check whether you're eligible from one of the links provided. Highly anticipated Bitcoin Collection Inc. announces a 0.0058 Bitcoin mint price. Tyler suggested that was very reasonable. It sounds pretty reasonable too. That might be crazy, but $390 in this market for ordinals in particular sounds pretty fair to me too. Getting into some more news, Artblocks announces pause to curated releases to refine the future releases. I think they're going to take some time to just assess the situation, make sure their releases are more in line with what collectors need and want. Next, DeFi on Solana protocol Camino announces a snapshot at the end of this month, on March the 31st. This is what we mentioned earlier. JPEG said, hate to say it, but the Camino announcement probably solidifies them as the #1 borrow lend protocol on Solana, ? Probably going to be a migration of capital from the other borrow lend protocols into Camino in time for the snapshot. That's one way that people could see it. And finally, Athena announces $4 million been made for its treasury in just 1 week after only being live for 2 weeks. This is the protocol that has attempted to create a synthetic dollar. Very interesting stuff there. Legendary, that is the Web3 roundup. Those are some of the other things happening in the space. I think we should get into this NFT lending crisis. Do you want to take that, or do you want me to just set up some general stuff of what was happening there?
1 second before we get into it, because I made a promise to myself, if you ever bring up the name of the token that my Uber driver shilled that I was posting about, I will mention it on the show. And that happened. I didn't tell you about the promise I made to myself. It was BitTensor.
No way. Your Uber driver bought
yes,
the cow.
his reason to shill it, again, it was not because they want to make machine learning a tradable commodity as they pitched their vision. His reason was the logo looks that similar to Tesla, and he thinks it's a secret project by Elon Musk, and hence it has to pump. And he did throw almost all of his life savings into it. So I said, if you're ever going to have it on the snapshot, I will share what the token was.
Wow. Okay, well, we're doing our bit. We like the Uber drivers. We are grateful for their service. Send his life savings to infinity, hopefully. But to be fair, like, I don't know when your Uber driver bought into that token, but gosh, that has been on a tear. I don't know if you've seen
up at 7x.
Yeah, like, you should look at that chart if people haven't looked at it. It's almost like I look at it and people have been saying it's going to go up for so long. I can't buy it. And it's exactly what Sam was talking about earlier, exactly what Sammy was talking about earlier. I can't buy that chart, man. Like, go and look at that chart and think you're going to buy that at this point. Absolutely insane chart right now. Okay, we want to talk about this NFT finance debacle yesterday. It was quite interesting, quite dangerous situation that the Pudgy Penguins found themselves in some way. The floor price had fallen to around, I'm going to share my screen for the people who are watching in so we can look at some of the loan action and get a sense of what was going on. So Pudgy Penguins obviously been down. They're 20% down in the last 7 days. And it looked really precarious. Like, all of these green dots that you can see, which are the loans which are taken, loads and loads of them were great. And when I unclick that, you can see the loans which are kind of up for refinancing. So if I click here, I can lend against that. But the problem was yesterday there were so many available for loans because everyone had seen the price go down. Everyone was like, I need to get out of this loan as a lender. So all of these things became up for refinancing, which obviously scares people who are holding the asset because they think if there are no lenders who stepped in, these NFTs will go to lenders who do not want them. They were only providing loans, which means they will sell directly into the bids to try to get their money back. So what happened was the founder of MetaStreet, who is called David Troy, said this tweet: I will be personally injecting $1.3 million and MetaStreet will be providing $700,000 into Blur loans for Pudgy Penguins over the next hour. $2 million should be enough to stop the debt spiral for the birds. This is honestly a ridiculous situation that shouldn't happen again in the future. It's just some interesting comments from other people. Moon Overlord said, that's only enough money to cover roughly 40 to 50 of the loans. There's 400 plus right now on Blend. You need like 10x that amount of money to cover them all. The green box is what covers. It's barely a dent. Why don't you let people get wrecked and just buy their penguins? So that was his perspective. Just let the market figure itself out. You don't need to kind of do a bailout in essence. Just let people get wrecked. And then there was actually a very interesting discussion, which we won't go into in the comments. But Legendary, I want to come to you first and would love to go to NFT stats for his perspective. I know he covers the loan market a lot. Legendary first, what are your thoughts on this kind of, I guess it's a kind of a bailout from the MetaStreet founder, seeing the situation in the loan market, realizing that, you know, this could really spiral if it gets worse, and stepping in? Do you think it is a ridiculous situation that shouldn't happen again?
Look, first of all, on what David did, I think it's smart. I think for him, and I'm a big fan of MetaStreet, but even with that being said, I think it's a smart move, because you know, if you're gonna bail out Pudgies or part of it, or this is the narrative that you are like presenting to the public, this gets you goodwill and attention, and is a good marketing thing to do from the MetaStreet perspective as well.
Okay.
So I get it why he didn't choose to go for like, let people get wrecked and then buy the Pengus cheaper.
Sure.
In terms of if this is a situation that is absolutely ridiculous and it's not bound to happen again, honestly, I can't speak to that, as I'm like not as deep in the lending market, and it would be like a more unqualified take. So I'm just gonna hold back on that part of it. But from the marketing perspective of it, and from making that move, I think that's a smart thing to do for sure.
Yeah, I mean, I was thinking about that too. From given that there's like increasing competition in the lending market on the NFT side on ETH, like for someone to just come in and step in there, very good for MetaStreet, right? Very good for MetaStreet, especially because they're doing this interesting liquid credit token for CryptoPunks at the moment, which me and you are both experimenting with. Would love to hear from NFT Stats Sam as well. I saw him in the comments kind of getting into the weeds of this conversation. Sam, what were your thoughts on MetaStreet kind of stepping in here and preventing a potential kind of death spiral on the lending side?
I think there are a lot of things he said that are just wrong. He said this has never happened before. If you actually look at rates, like the median rate for Pudgies yesterday was pretty much kind of where it's been most of the year. We had 2 times in 2023 where rates were 2 to 3 times higher. Like there was nothing. I actually don't think this was about the lending market. And if you actually look at how much he lent, he put out 32 loans. There were 2 farmers over the past 2 days who put out 250 loans. So his impact, like, and I tweeted this chart, it's the second tweet on my feed. If you go check my feed, like he actually did not really move the needle. All he did, and it was the thing that is the single most important thing in NFTs, which is he changed the perception of supply and demand. And you know, people were panicking, and they weren't panicking because of loans. They were panicking because you had farmer. Like the thing about rates, even if rates are over 100%, like that's like 0.02, 0.03 ETH per day for a farmer. Like it's a gas fee. It accrues over time, but it's not the type of thing that people have to immediately dump for, because APRs are annual interest rates. So it isn't like farmers, and I see this because I've been looking at this market, and they've been absorbing 100% APRs for a long time. This was not a lending crisis. The issue here was that there were farmers who dumped 50 that weren't in the pool. And suddenly, you know, the game here is the same 3 people trading back and forth, the same 50 penguins back and forth and earning points. Well, if someone adds 100 extra, someone dumps 50 into the market, which happened yesterday, someone dumps, like, that is what destroys the market, because there is not enough ETH to take care of all of that. And you know, the big dumps that we've seen happen, like the serious damage that we've got through kind of like airdrop farmers accruing supply and dumping on each other, all really happened before Blend was even a thing. I mean, the worst of it was in March and April, which was before Blend launched. So I think the diagnosis was totally wrong. And I tweeted this in his comments. If you actually look at rates, this was nothing all that out of the ordinary relative to where rates have been. The farmers have shown an ability to absorb it. But what he did do was he changed the perception of supply and demand, and he changed this perception that things were down only. And when things, you know, and if everyone thinks everyone's going to dump, and then suddenly people are like, holy shit, budgets are 11 ETH, they were at 20, maybe I can buy. You just get that wave and things reversed. So I don't know. I mean, I think that what happened here is a structural thing that's related to the way that, and if you look at my chart, there are 2 farmers who gave over 220 loans in the past 2 days on Pudgy Penguins alone.
Yeah,
there will be like, in 48 hours, they'll just leave and they'll dump them all. And then we'll be left in the same situation. And it'll just be a matter of where perception is. But what he did was he gave out 32 total loans relative to 450 between the 2 biggest farmers. So it didn't really move the needle. It just changed the sentiment. And we're in a game where sentiment's all that matters.
Amazing analysis. So helpful, Sam. Thank you. We're just showing that chart up on screen for the people watching in on X and YouTube. As you can see, Farmer Lender 1, 265 loans, CBB 225, OX Zergs, the founder of MetaStreet, 32. And then there's a couple other people at 29, 18, and 15. And the other thing which you mentioned, which seems to be like the main catalyst, right, is when someone unexpected suddenly dumps a whole load of supply. And that was the tweet from Cyrus, where it said a Blur farmer just nuked 50 pudgies for a 110 ETH loss after holding through this last couple of weeks of down only. Sam, did you want to come in back there?
Yeah, I was just like, I think because the lending market's opaque and people can make, it's not opaque, but most people don't understand it, and people can make comparisons to the 2008 housing crisis and stuff like that. I just think we get a little sensationalist when we start, it changed. And I think it has a huge impact over time. But again, like when he says things like, this is the first lending crisis that pudgies have ever had, it'll never happen again. It's like, I responded, I was like, what are you even talking about? Like APRs averaged 150 for 75 to 80% LTV loans. When Blur season 2 ended and all farmers disappeared because they didn't know what to expect. When Azuki Elemental had their crisis, APRs for pudgies and everything got up to 170. Like we've seen this before. This is a very fast, this is a very fast scarring market and then fixing market. Like the amount of money that can kind of come and go with the farmers is very, very fast. This whole thing was nothing new. What was new was the number of people who were dumping. Okay. And that's happened before too.
There we have it. Amazing analysis, Sam. Thank you so much for that. Really, really appreciate it. But guys, we have run out of time. That has been such a fun show. Discuss all kinds of things. And it's the end of the week as well. So last show of the week. We hope you enjoyed it. Thank you so much to my co-hosts, Sammy and Legendary. Thank you so much for English, our special guest, resident ordinals expert, as well as all kinds of extra insights on the rest of the NFT market too. And thank you so much to our other speakers, NFT Stats. Oh, Pappy was with us. Want to hear from him more as we go through. And Jack, Funky, Carlitos as well. Thank you so much to everyone else in the audience for listening in. We do this every single day, Monday to Friday, 7 a.m. Eastern Time, 12 p.m. GMT. And we'll be back with you next week on Monday. Have a wonderful weekend. We will see you next week. Bye-bye.